I want to take another look at the ES market, and we have a familiar setup here with the 200 period moving average, which is going to represent a filter. We're only going to go long when price is above it. And we have a 5 period moving average represented by this blue line, which will represent an exit. Again, we're only going to go long. Now, let me show you the results of this. This is what the equity curve looks like. This is a very simple system again. It's basically a couple rules, a few lines of code. The performance summary looks like this. Profit factor of 3.3, 80% win rate, actually a little above 80%, and $300 net profit per trade without slippage and commissions. And again, the equity graph. This is from 2000 to the end of 2009. So I don't think it's traded this year. No. So what rules constitute this? Well, it's kind of opposite of the 50 period moving average. When you're buying above the 50 period moving average, you're buying into strength when that closes above it. Here what we're doing is a much shorter term time frame in the sense that, yeah, these are daily bars, but what we're going to look for are pullbacks as price is above the 200 moving average. So if price is above the 200 moving average, we're going to consider it's valid to start buying pullbacks. When you're buying above a moving average, you're buying into strength. There's kind of a breakout above the 50 period moving average. And what we're doing here is waiting for 3 consecutive days of downward movement. 1, 2, 3. So you can see the market came up here. We had a red candle there, but here we had 1, 2, 3. At the close of that day, we buy. And then we simply sell when the price closes above the 5 period moving average. That's it. Now what this shows is in this type of market, the ES market, you do not want to be buying on strength, at least short-term strength. You want to buy on short-term weakness in an overall bull trend. So when price is below, we don't trade at all. But when price is above the 200 moving average, simple moving average, we wait for 3 days of pullback, buy at the close, and sell as the price moves. Now again, this isn't a trading system, although it certainly looks darn good. For example, you can also see that perhaps extending some of this this 5 period moving average into a longer one would actually allow us to capture more profits per trade. There's also no stops on here. Again, here, look at these. You can see maybe extending it to a few more days or changing this period to a 10 or a 9 period would actually allow us to capture more profits. But again, the demonstration here is do not buy on short-term strength into the ES market. Because of its reversion characteristics, it's going to want to pull back. When we're in a bullish mode on the ES market, you're going to want to buy into weakness and sell into strength. So this is just another indication of the behavior of the ES market. This continues, of course, to apply to YM. Thanks, everybody. I just want to remind you that we do have a website, eminiedges.com. On there, you're going to find free easy language code, trading tools, indicators, and even a few trading systems. It's all available for free, and there's a lot of other information in regard to automated trading. Thanks.